Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. So it is Wednesday. We actually might have some action today, so I can only hope. Let's go to the charts first, though. S&P 500 yesterday, not bad overnight. It's just kind of floating up. Of course, like everything is still kind of on hold for the CPI, but we do have some Fed speakers. Treasuries had a little bit of a recovery and are above yesterday's high, which is really good. That 1.95 area is apparently bad. So, yeah. And we are going to get, well, I already said that. We're going to get some Fed speakers. I expect that they're probably going to try and push back on this 50% basis point increase in March. So we might see that. Oil has kind of been coming off a little bit. Biden administration has been talking about another SPR release, which could hurt oil price. Might give us a good point to try and get in. Natural gas is still coming down. Good feel there. Gold and silver. Okay, well, so gold and silver are more recently taking off again here. Well, yields are coming back a little bit, so that is good for. But this trend line that we got in gold here, like somebody is definitely pushing this thing now. There, you've got a big boy behind you, possibly a country. So copper taking off there. I might want to look into that a little bit more because that is an unusually strong move there in copper. Might be some sort of a supply disruption though. Okay. So, good morning, Anthony. Good morning, Stephen. And Bill. Oh, so many people here this morning. Did you for Russia and Turkey? They like Bitcoin. AVAX should be. I don't know. So did you guys see the whole thing about the Bitfinex hack? I tried putting a short here on YouTube, but they cut it off, so I just took it back down. But man, this not only did they caught them laundering the money. It's unclear if they actually hacked. I want to make that clear. It's unclear if these guys were actually the ones that hacked Bitfinex back in 2016, but they had the money and they were trying to launder it into the United States. They did a couple of things that were dumb, but at the same time, it wouldn't surprise me somebody would make those kinds of mistakes. So I think it is possible they could be the hacker, but we don't really know. The girl is hilarious. Oh yeah. Well, and the thing that was crazy, like she had a YouTube and she had a TikTok account. It doesn't show you how many subscribers the YouTube has. She didn't have that setting turned on, but like the thing that was crazy to me is most of those videos only had about 1,000 views. You know, so she wasn't performing better than our channel. And they had put a lot of work into it. Like those videos they had paid somebody to be a videographer. Like there had to have been at least 3 to 5 other people involved in making that channel, right? And then the TikTok account was just like unfocused nonsense. It was kind of funny. They're going to make crypto even more silly. More newbies to come. Yeah, maybe. Baby. That looks like the baby here moved my monitor a little bit. Crypto transactions over $8,000 will be a criminal offense now, huh? Well, look, Bitcoin pumped on that news yesterday, and they're trying to move up this morning as well. They came back a little bit. They're trying to move up this morning as well. I think that having this money out of their hands, they were trying to sell it. So, and it was a lot. So that is kind of a good thing. But it also seems to expose a couple of problems with the Bitcoin ecosystem that, all of these people were a lot of the reasons that people liked Bitcoin. It's all of a sudden it's kind of like, oh, they don't get you outside of the reach of government, So smells a bit set up, all of this. Well, so here's my argument as to whether or not they did it, because I definitely get this sense from the Bitcoin community that like they don't believe it. So first of all, that's the popular opinion amongst the Bitcoin community is probably a really good indicator that they're wrong. Okay, but the second thing is that let's just a couple of number one, just because you're a hacker and you're really good with the technical things and you understand how to steal all of that money doesn't necessarily mean that you know a whole lot about how law enforcement works and how the international monetary system works and how to transfer money around securely and things like that. A lot of people were saying they seem to lack the sophistication necessary, but I don't see that in the documents. So you go through the government's documents and they detail quite extensively how they tried to launder the money. And it was quite a complicated process. They went through many different processes to try and wash the coins and make it so that the government couldn't find them. And it looks like that their methods were actually effective to some extent. The reason that the government found out was because of know your customer procedures when they tried to get it to the exchanges and exchange it for dollars. And so that is where the big difficulty comes in, right? Is if you are going to try and launder money through Bitcoin, the place that it gets hard is trying to get it into dollars. And how do you do that? I don't know. I'm not sophisticated enough to do that. So that they weren't able to do it, they got caught trying, is not, I don't think is a reflection that they're stupid or something like that. Okay. I think the biggest piece of evidence in favor of people saying that they couldn't have been the ones that did the hack is that he was storing the keys in his cloud storage. Okay. But he had them encrypted on the cloud storage. So I can very much see somebody thinking, okay, it's on my cloud storage, but it's completely encrypted. There's no way that law enforcement will be able to decrypt that and get the keys and so on and so forth. Well, it sounds like that the government has backdoors into these encryption algorithms. Because how did they do it? How did they get through it? They have a backdoor. Whatever he used, whatever it is that he used, we're going to find out what he used. Nobody's going to use that encryption algorithm anymore. Right? So I think it's very much possible that they did it. Another thing is that it might not necessarily be that they're so smart, expert hackers, as much as it is that Bitfinex is just not that smart. Okay. The guys on that exchange were doing things that they shouldn't have been doing in the first place. They were giving people access to the exchange that they shouldn't have been giving them in the first place. It was very much there's this thing in the Bitcoin community where it's like you get the privilege, It's like, oh, the right guy, and then they let you be able to see all of the orders on the exchange and trade against people and things like that. Like, there's a lot of that going on in the crypto space. And I think, or it sounds likely that they might have given her or her husband access that they probably shouldn't have had, and they were able to use that access to escalate things and steal stuff from people. Which, if that's true, and there is I have seen some evidence to suggest that is true, is a pretty big deal, right? Because that means that Bitfinex kind of knew more about what was going on with the hack than what they told customers. Right. So I do think it's possible that they did it. But it's also possible that there are other accomplices involved. It's possible. Because again, from reading the documents, it looked like the government knew that they were trying to launder the money, but they couldn't prove that they did the hack. So they didn't say anything about the hack in the documents. Strong message for all the other hackers? Well, sure. But again, like this is the thing that I think is just so funny about the cryptocurrency space. Like Bitcoin in particular, okay? Because Bitcoin is slow. It's not very private. There's inefficient, high energy waste, etc., etc. It's trying to be digital gold, but like they've basically crippled it. It is not a transaction medium, right? And so the whole argument there is that it helps you escape the government, and this is a clear indication of something that we've been trying to say all along, which is that Bitcoin only exists on the shoulder of the US dollar, right? It's not worth anything unless you can transfer it to dollars, because you can't do anything with it. You can't really realistically go out and buy things with Bitcoin right now, right? Which, kind of suggests that maybe another coin could do it if another coin got popular enough, but I think it's kind of already too late for them to do that. It's definitely traceable, but it sounds like that the methods that they use did kind of give authorities the slip. Because I think it was the know your customer protocols at the exchanges, and they went to multiple exchanges. So it was just like one exchange asked enough questions. And I think they made a couple of lies there that I think was, you can buy a Tesla. Didn't they kind of stop that though? I forget what the deal was with that. Okay, so I just want to note here, by the way, as we're going through the ZB, we're getting some spreading here. ZB has been falling down. The 10-year and the 5-year has kind of been holding pat, although kind of suggesting that maybe they want to move up. Gold has kind of come back and turned a little volatile after its good little run there, and I'm not really seeing a whole lot of movement in the 6J. We are moving down in the dollar though. Looks like 401k and IRS pumping money in equities. Well, we are in a time period where you should expect to see some equity flows come in. Yeah. I have to say, on the larger macroeconomic front, higher interest rates isn't the end of the world. It's the end of the world for some people, but it's not the end of the world for the economy. It's really a good thing. I mean, did people expect to have zero, basically negative real interest rates forever? I mean, come on, that is not sustainable. It was going to have to come up. And frankly, we knew that they were holding back, right? They held back because of the Delta wave. They should have tightened sooner. Like everything monetary policy wise would have told you to tighten earlier, but they held off because they were concerned about the Delta wave. Now they have to catch up. I'm like, that was a decision they made. It's not the end of the world, but it's going to hurt a little bit. The housing market is the culprit. Yeah, I mean, it's going to hurt for the housing market for sure. It's going to hurt for the housing market for sure. Why don't they just say that we're in huge crisis and they're going to be even more super broke? Well, why would you say that? That's not true. Okay. The economy looks quite strong, even though we're looking at some degree of slowdown here. After that, I think that the fundamentals of the economy look very, very strong. I think that the companies that are doing well are doing really well and will probably continue to do really, really well. And there are some companies out there that took on a lot of debt and aren't healthy that might have to go. But you know what? That needs to happen. They just need to go. Yeah, the low rates fueled the housing the most. But I don't know if the higher rates is really going to destroy housing so much. I mean, sure, it's going to have an impact, but I think some people want want. Yeah, I think they really do. I think some people want a housing market crash because they want to buy houses. And therein lies the problem, because the reality is that there are a lot of people that want to buy houses right now and there just aren't enough houses. So I think that you're still going to see a pretty strong housing market, but even though there will be a short-term decline here in the next year. Basically what will happen is it will go from this absolutely insane market to, you know, still a pretty good market in real estate. The average Joe is always negative when it comes to the economy. It's true. It's true. It's only institutions by nah, that's not true. So I would implore you to go and look at the actual stats related to that. I did not realize that they did this stuff, but they do. You can go and you can see how much institutions are buying, what percentage of the homes they account for, and all of this sort of stuff. It is not the significant factor that people think it is. It is a teeny tiny little portion of what's really going on. The real situation here, if you're interested in real estate, you've got to understand this, okay? We have been underdeveloping for the last 10 years, okay? Our real estate development has not kept up with the population growth. And millennials are now to the point where the only thing they really have to do with their lives is to want to try and buy a house. And so they've all kind of put it off and are all trying to come into the market at the same time. It is a supply and demand issue, absolutely. And these large investing conglomerates that are coming in and buying up houses, they're only doing that because of the fundamental situation in the housing market that would exist regardless of what they did. Okay. Yeah, they buy whole housing blocks, but again, go look at the numbers. It's a fraction of the demand. They've been buying in the US too. But again, after the financial crisis, a couple of things changed, kind of made it harder for people to develop. Essentially, is what happened. Is basically the macroeconomic situation is not as favorable to home builders, so they just not building as much stuff. And then you put on top of all of that, the cities make it super hard for you to develop stuff, anyways. They're just not building enough homes, and then especially it you make a lot more money if you build expensive homes rather than cheap homes. So on top of that, you have this problem where the supply is okay for the high end of the market, but the low end of the market is there's just not enough. The way they're gobbling up houses and turning them into rentals, I could dump my modest 80s family home for 600K. Well, it wouldn't surprise me. But again, why are they gobbling up the homes and turning them into the rentals? Because there's already a supply shortage. Like, it's just a really good investment because you have a market imbalance that is likely to continue for years and years. And who knows when they ever get the political will to make the changes that would be necessary for us to build more homes. Yeah, okay. I'm not bullish on the metaverse, but whatever. I would like to get into rentals. Before I got married, I was renting 2 of my rooms out. It was, man, it was the most awesome deal. I mean, my roommates, they liked it. They enjoyed the room. It was a good deal for them. I mean, it was a cheap room, and it's like you just rent a room. It's only $1,000 a month, and you still get like a whole house to live in. Because I was never there. It was a great deal for them, right? I wanted to go back to doing that, but like right now to compete, to even compete, you just have to have a huge wad of cash. Otherwise, maybe I would be doing more. Otherwise, I'd be doing more real estate stuff. I don't know. And maybe I should just go straight up into real estate. I don't know if I have the time or the skills to be good at that, but most of the popular people on YouTube, they made their fortunes through real estate, not through day trading. You go and you make your fortune in real estate, and then you turn around and you hawk it onto day traders, right? Okay, so they're pressuring the 1.95. I just want to point out 1.95 is considered by some analysts to be a key line in the sand, and some funds have a problem with interest rates above 1.95 and sell. But I don't know if this is really any kind of larger fundamental move right now. It kind of looks like they're market making and maybe testing aside. We need to check over here before I get myself lost in something else. Because we do have some Fed speakers today, right? And they are at 8:30 and 10. Okay, my time. So 10:30 and 12 Eastern time. So remember, Bowman starts speaking when the crude inventories come out. Well, those are much, much, much later. So I expect that probably we won't have to deal with that too much. Something that we are going to have to deal with today, though, is that there's a 10-year bond auction. So auctions tend to be bullish. Auctions have actually been doing really well, but before the auction, it can be a little bit of a drag. So we'll see. I haven't seen any big orders out in the 10-year yet, though. And usually there's icebergs and stuff. Yeah, I don't understand why you would want to go and just grind a boring game because of the metaverse. Like that's what, like they've been talking metaverse and gaming in the cryptocurrency community for like a year, and I still don't see gamers in mass picking up games and this game is so great and playing it. And quite frankly, gamers are very mad. The anti crypto movement, like the thing is before it was just kind of like it was kind of hard to be anti-crypto because just nobody cared. Now there is an audience of people, like there's a bubble forming. The algorithm is pushing content out to people that hate cryptocurrency, and it's a quite a large audience, and the core of them are very much gamers. So I'm super skeptical about this idea that where the money is at in cryptocurrencies in the future is really going to be from gaming. Like that's the narrative that they're pushing right now. The people that are involved in crypto are putting their money into that, but I really don't see the target audience really putting the money into it. So eventually they're probably going to move on to something else. I don't play pancake games anymore since 2016. I don't know. Maybe it's just getting older, but I don't play games as much anymore. And when I do play games, it's like Minecraft. So my 2-year-old likes watching Minecraft. So I will come in and play it for like 10, 20 minutes or until he gets bored of it. And then we go and do something else. If you say so. Not interested. You're 40. Well, I'm 35. Almost 36. No, wait. Actually, I'm 37. I'll be 37 this year. I'm 36, so I'll be 37. I'm getting old. I've been playing Tetris, man. Like, that's the only thing I can find. The shooters right now are just so stale. The shooter space is so stale. The old hardcore gamers are mad. You say that the new ones are in. I don't see it. I don't see it. Quite frankly, none of these NFT games are up to a player base that is anything respectable. Not anywhere even close. Okay. When you got one of these games that has like 20,000 simultaneous users, and come back and tell me about it. Battlefield 2042. Well, like if you go to Twitch, like here's why I say that. Okay. If we come over here to Twitch, by the way, the 30 year is coming back up, which is kind of interesting. So they're kind of what I'm been seeing a lot of lately is when the market makers kind of want to twist things and try and stop out individual leg players, they're really just changing the spread and then it reverts back. So if we go to twitch.tv here, it'll try and start playing here. So I'm gonna pause it. Yeah, okay. So we go to browse and we look at like what the top games are. Okay, so Valorant is the top shooter at this moment, at least. It changes throughout the day, but at this moment, Valorant is the top shooter. 160,000 people watching. That game was released like a year and a half ago now. Can you believe that it's been that long? But it's been a year. It's been over a year essentially since we've had a major shooter released that really shook up the space, right? Rainbow Six Siege, I think, is 2-3 years old now at this point. Counter-Strike, of course, is ancient. Surprised that Fortnite is still popular, but my son was telling me that the Spider-Man update for Fortnite was actually good and interesting. You know, PUBG, that's like 3, 4, 5 years old now at this point. It's old stuff. There hasn't been... And then where's Apex Legends? Oh, there it is right there. Apex Legends. That came out like right in May after the pandemic. So that's been almost 2 years, right? And even on the split side, another thing is that's interesting is like when you look at like casual games, you know, like Minecraft and Stardew Valley are still king. Minecraft and Stardew Valley are still king of those. I haven't seen like a really big game. There was that Viking game was hot for a while, but I started working on planes 33 years ago when I was 2. Wow. You're old. I played The Forest in VR with your 11-year-old. Oh, really? This is the other thing was that like we got the VR headset that the kids did not maintain interest in it for very long. No. They did not maintain interest in it for very long at all. Yeah, Valhalla was that's the Viking game that I'm talking about. Yeah. Now I go back and see where is that on Twitch right now. It was really popular when it first came out, but I kind of very quickly stopped hearing anything about it. Well, it's pretty far down the list here if it's even on here. I have to like Control F. Valhalla. No. It's not even on the list now. Not even on the list now. I kind of have to wonder if Minecraft at this point should be can't be considered an eternal game is what I would call it. So there are games. So in the board game space, the best example of this is chess, right? These are games that people will continue to play. They might not be like the most popular thing ever or like super dominant in culture, but there will be a group of people that will be playing them hundreds of years into the future. I think that probably the most clear example of this is Tetris. Tetris is truly is. I don't think people realize how huge Tetris is, and that will continue to come back over and over and over and over again, right? I think that at this point we could probably consider StarCraft Brood War one of those games because they continue to have a competitive scene, and it's really quite good and entertaining to watch. Counter Strike is probably one, although it might not always be Counter Strike, but there's always going to be a game that basically has the rules of Counter Strike, right? You're a pro in Tetris? Well, I'd like to see. So, have you tried playing Tetris Effect? It's so good, and they have all of these little individual modes, that you can really put your skills against. Like the thing that's cool about Tetris Effect is that they have modes and speeds that are just like inhuman, basically. So you can really test your skills. Anyways, I think that Minecraft may be to the point now that it is an eternal game. Like these kids continue to play it, and Minecraft has been out for a really long time. And I enjoy playing it. And we'll go through benders with our kids. I would play it more consistently if my 2-year-old was older. But maybe 2 years from now we'll be playing it regularly. So I kind of starting to think Minecraft is like that. And like the thing is what kind of a game would come out that would take the top casual gamer spot away from Minecraft? I just can't even conceive of such a thing at this point. So I don't know. Well, the 30-year bounced pretty hard there. The 10-year is still down just, like a tick. And same with the 5-year kind of ranging in this location. We did see the dollar bounce there, but yeah, the movement in the dollar here on the chart isn't as significant as it might appear from the chart. We're still only talking about like 5 cents. So Dota is probably an infinite game as well. There's always going to be some form of Dota. Although at some point I think that space is kind of needs to evolve. There's like the next evolution of Dota needs to come along now, probably. Because that one kind of it feels like that some of the gamers over there are getting stale to them, and they're kind of unhappy with the game in the community. I don't know. That always happens though. Gamers just don't like each other. That's the reality of the situation. Since we're talking about gaming, you know what the real problem is that 14-year-olds shouldn't be playing with 30-year-olds. All of these games, there should be a cordoned off section for people under the age of 21. That's the way it should be. If you're 21, if you're 20, you should have to play with the kids. And then once you're 21, then you can play with the adults. That's the way it should be, because these little kids shouldn't be playing with adults. That's my is it an unpopular opinion? Oh man, somebody was asking me here about one of my strategies. What do we got here on the future string subreddit? Oh, equity indexes. Somebody in Discord is like, oh, I wanted to put my trade plan in for today, but I don't want to overstep. Oh, we should give you your regular permissions so that you can post it. Yeah. VR make the kids so much worse? You say so? Oh, the only VR game that has engaged me is Elite Dangerous, and I'm not sure the engagement had anything to do with VR. Oh, jeez. I don't know. Like the thing is, the thing to me that I find interesting is that having a headset on my face so that that's literally all that you see, and I move my head and the VR moves. It's cool technology, but that alone I don't find engaging. I don't find that component engaging on its own. The being able to move my hands, and I don't find that engaging either. In fact, I actually kind of find that annoying. I think that the interface that I get through a keyboard and mouse is more efficient. Like, the thing that's cool about gaming and being on a computer is that you have an interface into knowledge that is faster and more efficient than your regular interface with the world through your hands. You know? So if the innovation is going to come in the VR space, they're going to have to find a better killer application. And I think some people thought that it was going to be like VR chat, but I don't think that one is panning out. It's just too niche. Like there's a certain group of people that really like it, but most people are kind of like, to really get like the sci-fi dystopia sort of situations that where people are just absolutely engrossed in virtual reality and stuff. I think you're going to have a much better interface, and you're going to have a much more compelling world that offers something that the real world really doesn't offer. And I haven't seen that yet. Not that it can't exist, it's just that they're not doing it. And then all of the people that are talking it up and saying that this is like the next big investment and everything are all hawking ideas that are quite mundane and stupid. Like Facebook going, oh yeah, you're all going to have virtual reality meetings. No, why would I want to do that? I hate being in meetings in the real world. Why would I want to be in a meeting in the virtual world? It'll be just like sitting in a meeting, except for that I'll have a screen attached to my face. Why would anybody enjoy that? You're totally against that. Oh, yeah, but I'm just saying, it's not that it's not about that it's a dumb idea. It's about that those are the ideas that the people pushing this space are leaning towards. What does that tell you about the practicality of the actual idea? Right? If it's really as groundbreaking as it says, why aren't they pushing into use cases that are groundbreaking as well and actually change the way that we interact with people? Allow us to do things that we can't do in real life. All they're doing is they're doing something that you can do already, except for that I guess you can see their body or something. It's just, sorry, don't see it. Well, the 10-year is actually rotating quite a bit between 23.5 and 24. Like they've ticked up to 24, they've ticked down to 23. The 30-year is holding pretty well here at 153.0504. So it kind of looks to me like some of the pressures here in the treasuries are still on the downside, even though I think in the end, given what we have on the docket here and everything, that we'll probably see the treasuries move up. And I think that it will be hard for the 10-year to stay, the 10-year yield to stay above 1.95. That's what I'm thinking at the moment. But we'll see. These traders certainly, I didn't see reactions. I didn't see defense at those levels. So it's totally possible for the traders to push it. And look, the 5-year, the 30-year ticked up, even though the 10-year was ticking down. The 5-year is ticking down. So we're just getting some extreme spreading right now. I wonder if well, they would have to tick up to '08, but if the 30-year starts ticking new highs, then would they start dragging the others with them? Or are the other two going to drag the 30-year down in the end? Well, I have an Oculus. I have an Oculus. Played a few games. Played a few games, but I was just like, well, I don't know, man. Maybe I'm a little bit depressed in the evenings. I don't think that I have like clinical depression or anything, so I'm don't think all like Seth is making this big vulnerable disclosure to us. But when I get to the evening, I'm often kind of sitting there going like, I'm not sure what I should do, because the things that I want to do, I don't feel like I have the energy for. Like the things that I want to do are like read complicated books and do more complicated study and programming and stuff like that. And like this work, and it's just like by the end of the day, I'm just tired, you know? No, it was the Quest. I mean, I could connect it to the PC, but there's a pill for that. I don't think that. Here's the thing. I mean, I work pretty hard, right? I wake up 5:30 in the morning. I trade for a few hours. I talk. It shouldn't be. Well, it is stressful for starters. Trading is very, very stressful on its own, and then it's to keep talking for 2-3 hours. That's a lot of work. That's kind of exhausting on you. And then I do a regular job, and then I work out after that. Although I haven't been doing very good on the workout, so I'm probably not feeling very good because of that too. I don't have the endurance, and I'm trying to build the endurance, and it's kind of hard when it's so cold outside, So, I just, at that point, I just kind of want to sit and relax and do something. But then all of the things that I find interesting and engaging are not relaxing. You get what I mean? So I have this conundrum between, okay, do something that I find engaging and get myself tired out even more, or relax and be bored is kind of the thing that I fight with every evening. Like if I get a show that I like, then that's the best, because you can just sit and, I enjoy watching the show. But again, then I'm sitting there like, but I should do something enriching somehow. I don't know. I've kind of been trying to think through some things though. Like I have been reading Taleb's book. I've also been going through this probability book. Like basically where I'm at right now is I feel like I've really learned a lot of really key things for order flow. And where I want to go now is I want to understand more about probability things and then machine learning. And I want to understand the statistics behind these machine learning models and everything too. So that's why I'm kind of going down that path. But it's a lot to pick up, it's a lot of self-study time. Well, now the 10-year has moved up to its highs, and they just took 3 ticks quite easily there. Anyways, so that's kind of where I'm going. But then I was taking a step back, and I said to myself, there are a couple of things that I could do for my indicator package that I think would help out a little bit to make it a little bit more clear. And I can include the stat packages that I have. Oh, so let me show you guys something. This is kind of cool. Now that the 10-year is moving here, I think I can kind of relax a little bit. I was a little bit too laser focused on it. So if I come over here and I make a 5-minute chart for the ES. Okay, here's my chart. I'll put it over here so we can still see the 10-year. Make it big. Let us add. How far do you guys want to go back? We could do like the last 2 years. Let's do like 720 or whatever. Okay. And then I'm going to add my stats indicator because this is a big bid there at 25 half. So some sort of large meta order, but that might have been enough to fill the meta order. Okay. Anyways, so my stats suite here, and I have a range histogram. Okay. Okay. And here's the distribution that we get. Now, remember that this is using like a log distribution. So these points over here down at the bottom, which is from 0 ticks to 16 ticks, is like 70% of all data points, right? And then you can see this tail. This tail is actually thinner than it appears because I'm using a log scaling, right? So I came in, I've added a couple of features to it. So for instance, I can get rid of the log scaling so that you can really see what the tail looks like. You see now, you can see very, very clearly the tail. I think I want to change it so that instead of doing value area by like a percentage, you do a value area by convexity so that, a distribution, there's a curve like this. This is a convex curve. And this one is a concave curve, right? So where the convexity of the curve changes should be where the value area is, to say we are now on the tails. So that's one thing that I want to change. But then another thing that I did, if we change back here to log, is I said, okay, but if you were to make profit on all of these, you would make more money than if you were making profit on only these, right? If I had to choose which side of this line, if I was able to fully take advantage of all of that range, right? The range over here is more, because what am I basing the value area on? I'm basing it on samples. This is 70% of all samples are over here. So I said, okay, so what if we do it by actual movement? So this isn't 70% of movement. This is just 70% of samples. But these moves are smaller than these moves. So I went and I did that and I made this other option. And you can see now it moves. It moves quite a bit more. So this is 70% of all movement. And if I were to change it to like a half, so like 0.5, okay, then that would be, so 20 ticks is actually more your theoretical break-even point in terms of range. Like if you were to always try and fade the range when it got to 20 ticks, that should like theoretically be break-even. If your stop was smaller than that, then theoretically you would stop out more frequently because that's a larger percentage of the movement, right? So I changed that. It was kind of interesting, yeah. Maybe give you a better point to put your stops. It's probably not perfect, but get recommendations on books. So if you want to teach yourself coding, I wouldn't look for books. I would be looking for websites, and there are a lot of code camps and like free code camps online. So that's what I would look for, is like free online code camp, free C# course, YouTube videos, that sort of a thing. I have a couple of videos on this channel that are about the things that you need to know to program in NinjaTrader and C#, right? And I don't have anything about that on my website. Here on my YouTube channel, I have a bunch of tutorials about C# and NinjaTrader. So even if you don't understand a whole lot about coding, if you watch those few videos, that's gonna give you the bulk of what you need, to be honest with you, to do stuff in NinjaTrader at least. Like that's gonna give you enough to go and look at somebody else's indicator and copy and paste the lines that you need and then modify the formulas into what you want. And for like 95% of what I see retail traders out there trying to do, or what people ask me, that helps you do. Like, I used to get so many questions about that sort of stuff, and then I made those tutorials and I don't get it very often, right? Oh yeah, so the stats suite was actually a free thing. What I'm going to do, and that's what I'm saying, is for the indicators. Yeah, I want to change it. I have like more advanced versions of the stats, right? So I'm gonna put that into a package, and then have like the free version of the stats package. So like the free version of the stat package won't allow you to change the scale of the, whether it's a log scale or not, and change the value area and that sort of stuff. But it will have the basic thing, I guess you could say. Because again, the thing that I'm focusing on more now is probabilities and stuff. I don't know how useful this probability stuff will really be to like day trading, because again, it's like you're using technical analysis. Like, even if you're using technical analysis from the perspective of like daily moves and stuff, it's kind of questionable. I got to tell you. But I think that there's some considerable evidence to suggest that machine learning algorithms are very useful, and I really need to learn more about that. I think it's like a really big project, but we're going to do it, and hopefully 2 years from now, we're doing more machine learning stuff. But on the split side, I feel like, I could clean up. I added some stuff into the indicators. The other thing that I want to change is I have the ones that's like the level 2 histograms and stuff. And the way that I have them organized and stuff, it hides a lot of data series and stuff. And so I find very often that people don't know how to get the things to show that they really want. And so what I want to do is I want to modify one of them to be more like essentially the Santa Fe model, to have here's market orders, limit orders added, limit orders canceled, and those are each separate series. And when you put it on, it will show all 6 series. So I want to fix that. That should be an easy modification to just get to. I should also probably do some work on seeing if I can automate again. See if I can automate level 2 stuff. Dog is barking. I'm going to ignore him because I know that we took him out before he went to sleep. He is becoming a real pill. Well, they're moving up, and you can see reloading on the bid at the high again. Now they might come through that, and that might hold them back, but so far it's looking like a strong trend. It looks like I finally caught it. I mean, I've been trying to buy here for a couple of days and losing money on it, but I thought that the news framework for today was supportive of an up move, and we've got the auction on top of all of that. Might be able to continue here, even though I don't know if this exact spot would be the best spot to be trying to buy. You could try buying at 22.5. Well, okay, already ticked up. Look at that. They're squeezing him. There you go. Okay, so that was as good as she goes. You could have hit into 26 and you would have immediately gotten filled at 26.5. That's good. Anyways, I want to change all of those things. You get the indicators, they're spruced up a little bit, because those are like 2 problems that I've seen in it with the few of you that have done it. And then I think that we need to go and do a Ninja Trader webinar, right? I think somebody just came down and let the dog out. This is good volume heading into 26.5 too. Well, something that we should keep in mind here. So first of all, this thing, you might end up with more aggressive order flow on the upside in the treasuries when they're moving. It's some pretty good volume here between 26 and 26.5, isn't it? Something that if they continue to push up, you could really see some quite wild volume, huh? Really? Okay, so Trading Floor Audio says Goldman Sachs boosts year-end forecast for the US 10-year yield to 2.25. So they only see us going up another 30 basis points this year. That's their year-end forecast. I'm quite surprised. I thought it was going to be at least above 2 point, because I'm looking at this and I'm like, well, they're going to get to 2% before we even get to the meeting. And then they're going to go even further than that. But now we're saying that they're only going to get another 25 basis points beyond that by the end of the year. Okay. That's interesting. Well, it's a big iceberg there at 26, 5670 contracts traded now. I thought somebody came down and let the dog out, but they didn't. I'm not going to walk away just at the moment. He may just whine and be loud. I don't know. I want to wait until this calms down. Then I'll check on him. That's, so now I'm hearing about it on the news squawk, but like, what? I'm a little surprised. But that's it. And that doesn't seem right to me. I need to, hopefully Zero Hedge posts like a synopsis. You know what I mean? Because seems to me like it would be a lot higher than that. Let's see here. News Squawk just giving some like pre-market numbers out here. Microsoft is up 1.3% and tech is up in general, hiring a director of crypto business development. Okay, there's a downtick there. Finally, they pushed through the iceberg that was holding them up. Let's see here. Ash K says that they had raised it to 2% in the first week of January from 1.75, and they had pegged in November. So this is the second market. So where do you get that one from? Because I had not seen, I had missed when they had said that. Well, maybe I did, and I just don't remember. If you got some good Treasury news website or like Wall Street analysis websites that you use besides Zero Hedge, I would love to know. Because it's so hard to find good fixed income news, man. So hard. In the retail space, at least. If they're right, it will be $80 for one steak by the end of the year. Oh, man, yeah. Who is it that's saying that? I don't know. We're getting some crazy food inflation. And because of this deal with Canada, yeah, the price of some meats are probably going to go up unless Trudeau, forfeits here soon. Although we are kind of starting to see some dominoes fall over there with the whole Canadian border situation. I don't know though. The problem is that that the U.S. ain't going to change their rules. in order to really fix the problem with the truckers, you kind of have to fix the rules in the US too. So are they going to do the same thing in the US and pressure Biden? Then that could have an impact on the market, huh? I just follow all the Fed websites and the CME ones. But where would you get the news that Goldman Sachs upped their forecast? Because that's not going to be on the Fed or CME websites. The only place that I've ever seen where they post like the full article is Zero Hedge. Okay, so looking back at where we're at here, that was a pretty good up move. Pretty good buyer coming in. With the amount of size that they put in, it looks to me like probably related to the auction. Probably related to the auction. People were willing to hit into them. Can you believe here? We've dropped about, just on that pullback alone, it was a good 10,000 contracts or so. A good 10,000 contracts just on that pullback alone. That's from Credit Suisse's bi-weekly release. Wait, can you just get that? I don't think that retail people can get access to that, though. The Zoltan one, I don't think they do, because I remember Zero Hedge posting that from time to time. But maybe Ashk has you know, maybe he works for a big bank and he has access to all that and he's holding back on us. Well, it's coming back pretty hard. I know, like the volume here in the 10-year is very negative, despite that super strong move up. Well, it was like, it's because it was pushing against icebergs that this could be a situation where the cumulative delta could really be deceptive. Are y'all long positioned or waiting for the? Oh, you mean over here in the ES? Oh, here's the open, by the way. This is a really quiet open. I don't know about that one. I'll take one contract. I think I'm with you on the long at the moment, at least. Might be a big pullback first, though. Like maybe even back to 40. They could come all the way back to 45.40 if they really, really wanted to. Well, there's Credit Suisse Global Money Dispatch. You don't think that they're going to come back that far? I don't think so either. I'm just putting that it's possible based on the overnight positioning. What's this? Bitfinex. According to a criminal complaint attached to the Department of Justice press release, the two are both being charged with money laundering conspiracy and conspiracy to defraud the United States. They are not being charged with conducting the hack itself. Yeah, it's just more of that. Well, another little test of 23 half there now in the 10-year. If you're ever doubting yourself, just remember that this individual was able to hack 3.6 billion worth of Bitcoin from an exchange. They got a picture of her. It does not. If they are the hackers, it does not look good for Bitfinex. But it does look like Bitfinex was wrong when he theorized that maybe the Bitfinex hack was an inside job. It was a hack, but they might have known more than they let on. S&P 500 moving up, looking good. 45.60 so far. Maybe the treasuries are reacting to the equities market here. Possible that it's just like the hedgers on the open buying equities and selling treasuries. The 30-year has not reacted as strongly on this. We've been getting flattening as the 5-year comes down. And again, every time that we come across this, I'm seeing significant changes in spreads that then mean revert. Yeah, 5's leading down. The 30-year didn't really move much. That was a pretty strong opening, yes. I wish I had taken 2 contracts so I could maybe take profits on one and just try and let it ride. In fact, it looks like the 30-year is maybe trying to move back up again. It's again, it's a little weird to me that Goldman Sachs's forecast is only 2.25. I thought if you had asked me, and I don't try and make that kind of a forecast, but if you had asked me, I would have thought that it would be more 2.25 to 2.5, if not going up into the threes, because like we have had basis point moves in a week that were 25 basis points here lately. You know what I mean? Like, remember that we were at 1.6 no more than a month ago. Octavius sees it too. Like think about that. We're going to move 30 basis points for the rest of the year. What? That's basically what they're saying. Well, 23.5 is proving to be quite a deep hole for the 10-year at least. And they fill it and dig their way out of it. What's News Squawk tweeting here now? How is this happening in Biden's America? Shortage of disposable coffee cups stirs an American energy crisis. Oh man. I'm sure that if I was a coffee drinker, I would be more upset, but I'm glad that I'm not and I can just laugh about that. Oh man. Hmm. So I'm wondering what I should do here with the ES. I think I'm going to try and take a little bit of profit here. And maybe I'll take another one later. But the way she's going here at the moment is a little bit like, Judge granted bail for Ilya Lichtenstein and Heather Morgan, the couple charged with trying to launder billions of dollars worth of Bitcoin stolen in a 2016 hack. They made bail, huh? You know, what's another thing about that story is like, why were they still in the US? If I had stolen billions of dollars worth, I would not be in the US. So if I ever move, no, I'm just kidding. I don't see myself living outside the United States, but it could happen. Maybe it could go to France or something. But I probably wouldn't move to like some South American country. You know what I mean? Unless it was up to something shady. Well, we've gotten a pretty strong order flow on the sell side, but it's interesting to me that the yields have not really changed. There were points at which the yields had changed a lot more on smaller movements. So it seems like the yields are reluctant, at least at the moment, to go higher. I wish I was doing a little bit of work to try and sort out the difference between those, but there's too many variables in it. There's too many variables in it. I do have something that I think if you put a bunch of fields in, it will tell you what the yield on the 5-year on the run should be based off of the 5-year cheapest to deliver, what the future is trading. But that basis difference between the two of them does change. So I'm not too sure, after going through the formula and everything, if it would be that effective to try and market make with that particular number. I think that you would be much better off trying to use the index from the actual bond transactions in the cash market. A lot of stuck sellers in the 10s not getting anywhere. It does kind of feel like that, doesn't it? But I don't know. So one of the things is, first of all, I don't know how much of that was the market makers versus people wanting to take positions, like definitely with the iceberging and everything and a 10-year auction today, that's got to be related to that. But it's hard for me to sort out where they should be coming from, going up or down. I think that the sentiment still seems to be higher rates, right? But I do think that we've got some fundamentals between some Fed speakers that I think will push back against the 50 basis point hike and the 10-year auction today, which are two pressures that I think could be bullish for treasuries. So where they sort it out in the short term is hard for me to say. But that at least initial defense of the lows at 23.5 and 23 is a little encouraging, isn't it? Because they just kind of got stuck there. It was like they got down there and then they didn't know what to do. They didn't have enough to keep pushing it into the lows. So I'm not quite sure what led to all of that, but I don't know. If there's somebody out there buying and they're planning on doing another leg of the meta order to buy, I bet you they're really happy though, right? Because they'll basically get to do the second leg at the same price that they did the first leg. Although with the way that we came back there and everything, probably also means that it won't be too hard for them to push back up to 126.27 if that's what they choose to do. I don't know. The volume at the moment, so there was another iceberg at 24. The volume still seems to be, the market orders still seem to be sells. Alligator says, I think we've seen the best in rates except if inflation goes out of control. Yeah, so let's talk about the CPI. I haven't said anything about the CPI. There's a lot of chatter out there, and it really seems to me like there are people out there in the markets betting that the CPI number is going to be really bad. So I don't know what the data points are that they're seeing out there. I'm going to guess that there must be some numbers that you can look at, that are really, more private information kind of stuff that suggests that inflation is stubbornly high. Because remember when we had last month's report, we were saying, oh, it's in line, and it kind of looks like it's kind of, the inflation is kind of abating. right? Is that the right word to use here? You know, and maybe the worst of it is over. And now all of a sudden everybody's really anxious to see it be high again. So I kind of have to wonder if we're not going to see the same situation again or not. You know, or maybe we basically I have a lot of people expecting a high number and then the number comes out in line and they're all relieved and yields come back significantly. I mean, that's what happened in December, right? But of course, you could see the opposite of it. You could see everybody expects the number to be high, it's higher than expected, and then there's all chaos again. The banks, yeah, they forecast the CPI. But the forecasts that let's see here. So if we come to the CPI, the forecast that they're giving for tomorrow, core CPI spot 5, is basically right where last month's was. So I don't know if that explains it, to be honest with you. I don't know if that explains it. Okay, well, the 5-year is pushing now to a new low and dragging the 10 and the 30 with them. And it is a pretty strong move. Well, they just passed through what the hell? Man, this is a battle. This is a battle of two whales is what this is, man. If I'm the buyer here, though, I would think that I would be, you know, I'd be happy. I'd be like, oh yeah, I can be really aggressive. I can get lots of fills here, and I don't have to be so cautious about exposing myself because clearly there's somebody that's willing to sell it to me and is really aggressive as well. So I don't know. Now, when that come back, we started to see the spread steepen again. The 5-year moved up more. 30-year basically didn't move at all. Let's reset the DOM right here since there's been so much volume at that location. Okay, what was that? Oh, that must have been because the 5-year ticked down there. But you can see that the buyer's still large iceberg at 22. But has ticked down. Not too much nibbling. It does just a little bit at 21.5. 660 is probably enough. Now there's a couple of good offers there at 22 and 22.5. Pretty big bid at 21. I don't know. That there was just like there was a flurry of activity, a lot of big bids and stuff, and now it kind of quieted down all of a sudden again. Do you think today's Fed would move? I think that when Mester speaks, that it will probably move the market. Yes. My prediction is, and it's enough of a prediction that I think I could put money on it. Although we'll see where we're at when we get to that point. I won't be streaming anymore. But I think that it could be dovish. Like, I think that what the Federal Reserve wants right now is for people to understand that they're serious about raising rates, but they do not want to shock the system. I don't think that they want to do a 50 basis point rise. So, is that like a 30% chance of a 50 basis point hike right now? I don't think it's going to happen. The market was kind of starting to price it in because of the jobs number on Friday, but I think that the Federal Reserve is going to push back on it. As they're very curious to me, the 10-year continues to sell there, but the 10-year yield is not really coming back. Like given that the 10-year broke those lows, I would have expected them to be on the 10-year yield above 1.95, but not yet. It is interesting flow though. It's been a while since I've seen this kind of a order flow where you get strong flows both ways. That kind of can end up being a difficult trade because you see strong flow, you don't necessarily know which side is going to win. And you have good reasons to think either side could do it, Does discretionary retail trading? Well, of course it exists. People do it, but like, I don't know. Does manual scalping still profitable and manageable? Does HFTs let us make money? Yeah, I don't think before the algos, not very many people made money from day trading, and after the robots, probably hardly anybody does. In the long run, I think that you can have good runs. You can have good runs. Well, some of these large orders have chilled out a little bit. I don't know. They're still at the low. It's not, the volume's not coming out, but it is holding there. Again, the yields aren't quite playing along for some reason. There you go. Okay. New low. Now we're to the Seth Pukes point. Which means that they're going to stop at 1.95 and head right back now. Man. Well, you know what? I've had a lot of trades where my MAE and my MFE are the same, but then I stop out on the adverse. I wonder if some of that flow, it did seem to coincide with Goldman raising their forecast that this volume came in, which I think is really curious. You're making so much more in the 10-year than you are in the micro 10 right now. Still at 1.95. Despite breaking a whole, like, what, 4 ticks lower? Yeah, that's odd. Hmm. I was thinking about should I do something with my CTA strat up here, but I don't think I want to add more shorts here. I'm a little concerned. Like, on one hand, I can see 1.95 being a spot that they breach for a little bit and then come back across in the end. But coming back across that could also trigger more selling. So I don't know. There's still volume pushing back here. That's the crazy thing about it. Like that alone makes me just want to go long the Treasury here again. But given the way that this came down, can I really justify a trade based on that alone? I don't think I can. I didn't really see a move that correlated with well, maybe a little bit of correlation with this XJ, but I don't know. It kind of seems like it's doing it on its own. So I'm not sure if we have enough information to really make a call here in the 10-year. We could just try a gamble though. There's a strong bid in the micros there. Wasn't really in line with what the treasuries did. Well, we are going to get wholesale inventories here, so that's a reasonably important number, right? Okay, so there's that wholesale numbers coming out. 2.2 versus 2.1, so inventories are actually a little higher than anticipated. I don't necessarily see markets reacting too much. Offers looking a little weaker here now. There's not these 4Ks sitting on it, at least, right? And we may be seeing the spread coming back here again. So it looks like, well, they're actually fairly equal here so far. I'm kind of noting the 5-year wants to push a little harder though. Yeah, the 5 year seems a little bit more anxious to go. The 30-year, there's big stacks on both sides. Mhm. Well, the 30 sold that one. Looks like they might be able to recover it, but when you see that sort of thing, often both sides get filled. ES making another bull run here. Think they'll break the high? Be an awful waste of time to come all that way and then stop. Hmm. Okay, so the ECB Schnabel is talking right now. He's kind of saying though that raising rates would not fix energy prices though. That's dovish, right? Because the biggest problem for the Eurozone right now is energy inflation. Hmm. $30 comes back to 153. So now we're really seeing the spreading there. The 5-year ticks up. So could the next move be back up with the 5-year leading the way and retracing the flattener that we just saw? Good amount of volume into 22 and the 10. I don't have much else to say other than what the order flow is doing at the moment. And I don't know if this is a situation where what we're seeing here matters because, you know, what the market orders are going to be in the, 30 minutes from now might have no correlation to what they're doing right here. You say a Eurobond might have some support here? Well, this 1.95 level in the 10-year, I think, is really key, right? And with the way that this is going, this doesn't look like we get through 1.95 and it's a breakout, and then they just go, right? It's looking more like an area that has a lot of congestion. Like there was a lot of congestion moving to it, and now that they've touched it, there's a lot of congestion on the pullback. Polish central bank to buy 100 tons of gold this year, says the governor. If you want a good price, I know a man. Tags Gordon Brown. So if they're going to make another attempt at these breaking back up to the high here, we need that 30-year to test 153.03, right? Hmm. Now, what I'm seeing right there at 22 is a little curious. Yeah. See, there wasn't very much liquidity, but they were hitting into it and restacking. And then they did tick down and they quickly ticked it back up. Oh, okay, there we go. It was like the 30-year tried. So now the 30-year is back to this spot. See if they make the push now. Well, I'm not seeing much of anything. It's just kind of drifting right now. There sure is a lot of level 2 changes coming through right now, though. Was that now that news about gold, about Poland buying gold, I don't see any effect on the gold market right now. ES testing the highs, not a new high quite yet. Hmm. Uptick. Hmm. The 30 is looking a little bit better there, but it's just kind of being dragged along for the ride right now. It's not. It doesn't seem like it's pushing back. Oh, well, maybe it is a little bit. Like the bid will be weak and they'll push down through it, but it looks like the 30 is just being dragged for the moment. $45.65 was their gamma inversion. Hmm. Well, when I did take a long in ES earlier, I've been on a pretty good run with the ES. I've had a lot of successes, although some of those I've done that with taking on excessive risk and basically cheating on sim, and they're all sim. But when I saw it come up into this area, I didn't like the order flow. I got out of it before it flipped back down the first time. So I'm not quite sure how I saw that, but I kind of saw it pivot and it turned back down. Did Poland announce that back in October of last year? Really? Well, why are they reporting that now? Why is that hitting all of the news squawks now? Okay, so now the 30-year goes. Okay. Well, this could be interesting if the treasuries decide to retrace the whole range. I don't know if that's actually going to happen, but it's definitely within the range of possibilities at this point, isn't it? Especially with the way that they pushed down to begin with. Probably so many people have taken positions. I don't think that the liquidity is going to be as good on the way back up. And in fact, I think that was part of why we moved down the way that we did. Although, and that might have been a factor, but the way that we moved down really was just driven by really strong market selling. So, because there was a lot of icebergs against it, wasn't there? This move up has kind of been a little bit more bubble up. Like I'm not seeing the market orders coming in, probably because everybody like already, took all their positions and stuff. Hmm. So here's a situation in the 5-year that is like a little odd, right? They're the odd one out. They've been pushing up, and now they were 1 tick lower. So I don't know. You could buy 09 half, but would you get filled at 09.7? It's not necessarily the best setup, unless you really had a good position in the queue at 09.7. But you can kind of see how sometimes there's those little aberrations in the spread that you might be able to take a tick out of. So let's just keep in mind that this 23 half is kind of like an inflection point of sorts, right? If anything, my guess would be it'd be bearish for gold. Poland Central Bank has been adding between 150 to 200 to their holdings since 2015 annually, and 100 tons is more like a cut. Okay. It's interesting. Well, gold is, for the moment, they're moving up a little bit, but I don't know. There's something going on in gold. It's probably not Poland doing it, right? My guess is it's Russia. My guess is that Russia has been buying gold up. And I suspect that there may even be some political goals behind that. Well, by the way, this move back up, I didn't see any headlines come through from ECB's Schnabel, so I don't know if that was just like rebalancing. Maybe possible that was just rebalancing, like shorts, trapped traders pushing back up. Possible. Oh, that was an ugly downtick. What happened there? I heard a click. I heard a click. Oh, they pulled at 23. Okay. That might have been some correlation. Interesting. The 30-year's still up, though. The one headline I am seeing is an extended period of high energy price inflation may raise expectations of future inflation. But I'm not so sure. That doesn't seem like that would be responsible for the order flow that we just saw. Hmm. Okay, so Schnabel is saying inflation is likely to decline towards the end of this year. So they tried to take another push at 22.5, but there was an iceberg there. Am I manipulating the 10-year again? Oh, it's all me. There's something going on there, Big Toasty, don't you think? What do you think it is? Well, I don't know. It must just be them fighting over the auction. But you know what I think that this means? I'm gonna go out on a limb here, okay? Because it's really tough in the treasuries right now. I really feel like that we were earlier in the year and certainly end of last year kind of ahead of the market, and it seemed like we knew things that the market just wasn't pricing in. Now we're kind of getting to where it seems like that the market has probably appropriately priced things in, and now we're more subject to supply and demand dynamics that we just can't predict and just don't know enough about. But I'm going to go out on a limb here and say that having this much fight in the 10-year is a good thing for the auction. I think that there are some people that are making some big bets on the auction, and that many people playing it means that the demand for the auction is going to be stronger than expected. I have no idea, but it seems like a good trade. I don't know. What do you think about my theory, though, that the 10-year auction will be good? That's my prediction. It's a real gamble. I do not feel qualified to make that conclusion, but maybe nobody is. I don't know. It's just there's a lot of fight here in the Treasury, right? and again, another thing that we need to keep in mind is that there was so much volume through all of that we have definitely formed a liquidity hole across this whole range. So if like market buyers came into the market, and we're not seeing that, but if they came into the market, we should expect that it should be a little bit easier for them to push things back up to the high of the range. Like it's very possible for them to do that. At which point we have to wonder how much of this is just people positioning for the auction and how much of it is people making actual bets. Like if we get back to 25, 26, will we see stops or not, essentially? It's new on the run. Any result would be good. That might be fair. One, something I was thinking about yesterday that I don't know if it's something that we really need to factor in very much today, but it is going to start becoming more and more important as we move along here through the month, is that we are going to be rolling over at the end of this month, right? So that could matter. So I'm just remembering a little earlier, we did have a strong downtick with a pretty big pull. I didn't see any correlations or anything, but I'm gonna guess that was correlations because they seem to have recovered it quite well. Disclosed.tv says White House COVID-19 response team has suddenly scheduled a press conference briefing for 11 a.m. Eastern time. And Jack Rosibiak says internal White House polling must have been really bad. Negative 23,500. Yeah, the sell through all of this was quite strong, wasn't it? We have had larger moves on less volume in the past month, for sure. Like this was very different. I think that we should remember this day, right? In fact, let's come back over here to our, what should we call it? What should we call it? Well, I'm just gonna call it the auction. Okay. Auction. but I've seen a change in the order flow today. That it's order flow that I've seen before, but not for like 3 years, right? I have not seen the 10-year fight like this in a very, very, very long time. It may be an inflection point. I don't know. I'm not entirely sure what it means. Finally got one that went 11 ticks for me though. That's good. It makes me feel a little bit better about life. And you're starting to see some buying volume come in, trying to follow the trend in the 30-year. They're at 153.07. Big liquidity day pre-auction, really. Yeah. Well, I mean, this I'm not necessarily, this much fight was always unusual, but like this kind of activity before the auction, this is what it used to be like, right? This is what it used to be like, and for the past year, it seemed like every auction has been kind of weird, and sometimes they were really bad, and sometimes they were really good, but I didn't necessarily see the kind of order flow that I was used to seeing on an auction day in the treasuries. It was kind of disappointing to me because there was, since the pandemic, the one tick ZN trade was really something that I only started doing since the pandemic, right? And an auction day where there's those kinds of iceberging and that kind of behavior at certain spots would maybe be some good opportunities to try and do that liquidity providing kind of thing, to just try and take one tick, right? And we never got it. Now today we are getting it. Probably on the edges on both sides. We probably could have taken a few ticks. You say fight is what it used to be like pre 2017, every auction and roll? Yeah, well, even I mean, we've been doing this since 2017, and I can remember many times 2017, really all the way up to 2020, where there was some days where there was a fight, but like a really strong. The thing that I find that I think is a little bit different is a really strong move that pushes us above the opening high, and then a really strong move that comes all the way back and pushes the low side of it too. Like, to move that across that far of a range is unusual. But then have all of these icebergs out there too, because it used to be like there would be fights, but it would be like only in a small area, and then there'd be like a really big trade, and then it would just kind of sit there for the rest of the session. NBC News predicts that the era of big COVID mandates is over and notes that the White House has been wrong-footed by Dem governors over the last few days. That's why this briefing will try to fix. Earlier, White House is scrambling to get in front of the pandemic after 5 Dem governors suddenly changed direction this week. Get ready to be scienced. Biden White House calls press briefing for COVID-19 update as Dem governors retreat. I'm feeling a little anxious about this price. We've had a good move up. I think this is the kind of move that could push to the highs and ultimately the buyers win. I still believe in my 10-year trade, but if I take some sequential profits here at 936, that is a win for the day. Science has changed, Grin. I know, right? This is going to be an interesting press conference, isn't it? All of a sudden they're going to say, well, the science is you shouldn't close schools and all of these mandates and stuff don't really help. And, is it all of a sudden you're just going to change to that? Do you think that the White House can pull that kind of a pivot off? Okay, they filled me. Thank you, Mr. One Lot, that filled me out 936. I appreciate it. We might, if we're lucky, we might be able to just hold this and then hope that the CPI tomorrow is good. I don't know. That's such a gamble, isn't it? But that's like everything that we're doing is just coming down to a gamble, and I only know so much. It's hard, but I'm thinking right now that CPI is likely to come in line, and that if it comes in line, that people are going to be very relieved. Probably after some key public-facing changes, yeah. Well, hold on, the news squawk is talking in my ear. Kind of what I'm getting at is, well, okay, so here's a good example. There's the White House has already been trying to make a pivot of some sort earlier this week, right? Like, I think I saw it come out on Monday, and I saw a couple of people talking about it yesterday on Twitter too. Okay, and the thing was, Pasaki was Pasaya. I forget how to say her name. Anyways, she was saying that the administration doesn't like mandates, and that it was the previous administration that had done the mandates. Right. And I'm sitting here like, are you kidding me? Because this whole time it's felt to me that even though Biden didn't do a nationwide mandate, that the Democrat Party was definitely the ones pushing mandates, and that Biden was ready to do it if he could find the excuse at a drop of the hat. And now they're trying to convince us that they were anti-mandate the whole time. Like, are you kidding me? But that's the sort of a thing that, like Democrats will go along with. They'll say, well, but Biden never called for a mandate. They never called for a mandate. So, that sort of a thing. So now, if they're going to all of a sudden shift to mandates are bad and we need to get back to normal, I'm not so sure that the American, like, if the idea here is pivot so that it will help you for the election, I'm not so sure this is going to help you for the election. I think that people already kind of have their minds made up about what his position was during the pandemic, and they didn't like it. And I don't know if him pivoting, that he pivot might be, okay, so by the way, here we're getting the oil stuff, right? Ooh, that's a good move up in oil. It's a draw. The forecast was 1.5 million, but they actually had a draw of a negative 4.756 million. So that is going to push them up. Do you think that the White House will do another release of the strategic reserve? Was she State Department spokesman under Trump? I did not know that. Anyways, like that he pivoted, maybe that helps him. But I don't think that he's going to be able to get away with saying, well, we were actually anti-vaccine we were anti-mandate the whole time. Especially like we were anti-vaccine mandate the whole time, because like, good grief. You took it all the way to the Supreme Court and lost. I think a lot of people are so tired that their narrative pivoting won't matter as long as people are able to put this whole nonsense behind. Well, are you saying what I'm kind of saying, which is that people's opinion of Biden has probably solidified too much to make a difference for the midterms this year? Or are you saying that if the economic situation changes, that's all that matters? Because I think that's a very reasonable way of approaching it as well. But it's also interesting to me. I think the thing that we need to pay attention to here for markets is that like the Biden administration was already kind of pivoting, and now all of the sudden it's like they need to have a big press conference. So I think it's not just like a policy pivot. I think that it's like a science pivot, right? Well, I'm happy that I took my profits at 3.8 where I did. In fact, I think I'm gonna try and get a fill on the bid here if I can. Because this is starting to look like, especially in the 30-year, that this is just kind of a really wide range, but an overall downtrend. Like the flow that I'm getting is not in line with, well, actually, it kind of is and it kind of isn't. So the theory I've got running here is that demand for the auction will be stronger than anticipated. Well, what I'm seeing here in the order flow is definitely that the pushing the range both sides has created a massive liquidity hole. So it is now really easy for them to move across this whole range and take some of our profits. And so it's probably better for us to just take the fills on the edges. And like if we still believe in our original thesis, maybe we'll wait for another test of the lows before we try it again. By the way, what has the volume been? It's kind of flat. Kind of flat. Yeah, it's definitely like the liquidity is so much softer now, isn't it? Really? Okay. 4 years ago, Heather Morgan, accused of stealing 3.6 billion of Bitcoin, managed to hack Twitter to get me to follow her so she could direct message me. I promptly unfollowed, but she was still able to DM and kept sending long messages some more recently. Okay, so this whole thing about like they're not sophisticated enough to do the hack. It looks like they were. I mean, it seems like they were. Well, darn. Should we just go? Should we just go for break even? I think I will. Oh, that was under Obama for Pasaki. Yeah, gotcha. You know, thinking about, okay, so Schnabel's still speaking, but the headlines that have come out of him so far kind of sound more hawkish than anything. But the market, I haven't seen like really strong moves from the market on it. You know what? I wish I had just taken both contracts off when I had them, because now I'm looking at the time and I'm like, well, this could keep going, but do we really want to mess with it? The better trade may be waiting for the auction to happen, and then when it does end up being stronger than expected, trying to take it on some momentum afterwards, because usually what happens is there's more upside after the auction. My stressed, my eye is twitching. Haven't had this problem in a long time, and whenever it happens, I'm always really confused about what's causing it. Another thing we could do is we could wait for that 1.95 area, because that certainly is acting as support resistance, and there's a reason to think that it would act that way as well. As long as there's not some super strong order flow making a bet on based on something, and right now I don't see the catalyst. So the only thing is the CPI tomorrow. So think about that. If CPI tomorrow is in line, okay, Treasuries come back a little bit, then what at that point? What's like the macro things that can drive us in Treasuries, right? At that point, it kind of feels to me like um you didn't got much. You got a lot of ranging, and we kind of have to move more towards market making strategies, you know? Okay, so now we're hearing Fed's Bowman talking. The most important aspect of the central bank digital currency discussion, in my opinion, is the preservation of the intermediary banking model. But isn't the whole point of having a central bank digital currency to get rid of that? Well, but I can see why they'd say that they still need it, because people still need to make loans and stuff like that. Hmm. They may get a higher low here in the 10-year. I mean, there's somebody holding it there. I don't know. Let's see if there's more crazy volume here, because I'm kind of suspecting that all of the people that wanted to put the orders out there did it. I could be wrong. We're getting decent icebergs on both sides of this central area around 23. School mask mandate in Massachusetts will be allowed to expire on February 28th. The governor's office is to announce, reports Election Whiz on Twitter. Something's going on today, guys, for sure. All the politicos are seeing the rumblings. I don't know if that pertains to anything that we see in the markets and the flows today, but I kind of feel like that electricity in the air, you know what I mean? What time is that press conference? I can't find it. I think they said 1 o'clock, but it could be. Oh, hey, I got a good little tick up there. I could have, or maybe I could have held on. Maybe could have held on. Of course, I could try the original trade at 940, but I don't know if we've got enough time. I mean, I could hit into it right there. I don't know. One of the problems is like when you're right in the middle of the profile, right? What's more likely to happen? That we have another really swift, powerful move up to the highs, or that things just kind of start ranging around 23.5. Tomorrow, yeah, tomorrow's the third. Of course, it's the 30-year auction tomorrow. I have to say, Akshay, I really like you because you're posting relevant information. Totally. And it looks like you're finding some information, or at least you remember some headlines that I don't. Because that's the thing that I tend to be good at, that people like me for, is I remember all of the things that happened in the past and I follow the news really well. But find news about Treasury market, supply and demand is hard to find. Very hard to find. Wow, wait. So the ECB is responding to somebody on Twitter. They said, if the economy is in a great place, why are interest rates 0 or negative? And the European Central Bank responds to them with Schnabel saying, negative interest rates reflect the low inflation environment before and at the beginning of the pandemic. Our policy is data dependent. We continuously evaluate the monetary stimulus required for inflation to stabilize at our 2% target in the medium term. You would never hear the Fed talk about it like that. Right? Like the Fed seems to be reluctant to even call it stimulus. They want to pretend that what they do doesn't affect the market. Even though we all know that it's basically like prop up stock prices and to keep the inflation at the 2% target. I don't know, man. This is the second or third time I've kind of seen this messaging difference between the ECB and the Federal Reserve, and I don't like it. I don't like that the Federal Reserve is the one that's not being honest. Why is the ECB being honest but not? Medium term, so anywhere between 2 and 10 years, right? I don't think that those interest rates are going to stay negative. I don't know. Like one of the things that goes through my mind when I think about all this sort of stuff is like, okay, you reduced interest rates to unprecedented low levels because of the pandemic. When everything's over, shouldn't you have to bring them back to a normalized rate? And if they do 5 to 7 interest rate increases this year, that gets us to about where we were, doesn't it? And then at that point, shouldn't things just die off? I mean, that's kind of a little bit more uh, speculative, but is it the case that we're going to have like a pretty strong aggressive increase in rates here, and then we go back to the Goldilocks zone where interest rates just stay low and they don't do anything because of deflationary pressures? It's a possibility, right? What do you think would be more useful for futures, NQ or Jigsaw? Well, I really think that Bookmap is more of a preference than anything. But I have to say the DOM in Jigsaw is a lot better. And I even if you're using NQ, I think that that's the most important thing. But not everybody sees it that way. A lot of people really like Bookmap. So Bookmap has, at least for now, has a little bit more customization, like in order like making your own indicators and stuff available. So that's like one thing that you can factor in. But apparently that's going to be changing very soon in Jigsaw. That's what Peter's been saying on his blog, at least. So let me try and approach it from a different direction for you, Daniel. The reason that I went to Jigsaw primarily was not just like which tool was better at the time for the instrument that I'm trading and things like that. A lot of it was that it had the best DOM, but the other thing was that I would just looked at the development of the product, and Jigsaw has had a little bit of a slowdown in development over the past year because first they made a big feature in the charts, and they had to create like a whole new dev team to do all of that. But overall, what I continue to see from Jigsaw is an owner and a development team that want to continue to try and push the edge, that is going to find new things to put in there that are going to make a real difference. They don't waste their time with things that we know don't really work, like technical analysis kind of stuff. I mean, they got to have it for the charts, and there are some technical indicators that I still really like and I find useful, even though I know that they're not predictive, right? But they're really putting their time into the places where it makes a difference, and so that's why I recommend Jigsaw. And of course, I should also disclose I have an affiliate link. If you use the affiliate link in the video description, you get a discount. You get $100 discount or something like that. So those are some other things I would factor into your decision when you're picking your platform. Is you should really like the team behind it, right? So, because you're going to be with them, hopefully you're with them for a really long time. You're with them for years and years and years, and you got to be thinking not just about what the application is like right now, but like what the application will be like 5 years from now. And I picked up Jigsaw like 5 years ago, and it was a really good decision because they've continued to improve that ecosystem. Well, the 10 years still stuck at 23.5, but the 30 did come back up there a little bit. I gave up a tick or two, but given the time of day, if I don't really want to actively watch it, I think that this is okay. Oh, I actually was at 947. I really could have waited. Huh. Really could have waited. Yeah. Well, that's okay. I might have been able to have my other order right here at 937 and gotten the full 10 instead of just 12, but... Oh, I thought you may have posted another question, but it was the same question. The ECB has to juggle between 24 finance ministries and the Fed only has Washington. I don't know, man. Maybe it's all in my head. Maybe I'm reading too much into the lines. I should look at the camera. But that last comment by the ECB president Lagarde at the last ECB meeting the other day, right? Where she was basically saying, hey, the economic situation in the US and the economic situation in the Eurozone are very different. And we didn't overpump our system with stimulus like the United States did. The only inflationary pressure that we're really experiencing right now is energy costs. And we're not having quite the same problems with everything else that the US is. You know, I felt like that was kind of calling the Fed out. That they were kind of saying, well, you guys made a mistake with your fiscal policy. You pumped too much and you're trying to avoid taking responsibility for it. That's what I felt. I need Rhythmic for Jigsaw, right? It is expensive. You can use Rhythmic or CQG. So it's your choice. And the data fees for between Rhythmic and CQG are pretty close to the same. Okay. Unless you want to go and get like Rhythmic market by order data, and then it gets expensive. But John Grady's saying whipsaw activity in stock indexes. Well, is he not trading the 10-year? I wish that I had tried doing some one tickers through all of this, because I think this was some good order flow for one tickers. Thank you so much. I'll check it after. Hey, thank you very much. Yeah. I have all this. Yeah, like one of the things that I keep kicking myself over is that we have done a lot of things that I think can be really useful to the viewers. I think that sometimes I get in my head that it's like it's the same 12 people that are watching the live stream, when there's a group of people that are always coming in and out that just never say anything, and like they never click the video description or hear me talk about it, so they don't know about the things that we got that can help them, right? I think that if you're going to trade, you should have a news squawk. So we have an affiliate link for Financial Juice, which is it's $70, but that's cheap for a news squawk. That's a really good deal for you. And then we've got discount codes for Jigsaw. You get $100 off of something in Jigsaw. So if you already owe Jigsaw, but you've never gotten a discount, then you can get the discount on the year live trading license, for instance. Things like that. So, order the mugs. You want the mugs? Those are always fun. And I just don't. Or, frankly, if you're using NinjaTrader, the indicator package that we have, because there's some really, I can't imagine myself trading without that stuff. So you should check that out too. Yeah, I definitely could have gotten filled if I had been more patient. But we're only talking about $5 or whatever. So. Half the large costs in EU were complaining about politicians blaming on them for inflation, while it was the central bank's fault for pumping during the quarterly earnings. I think Lagarde responded. You think it was that? Okay, sure. But it was just kind of like you could have said that and not have to compare yourself to the US, though, right? Because the thing that I see missing from the conversation is basically like, we put too much fiscal stimulus in. And like, there is some really good research. This whole inelastic market hypothesis, I think that matters greatly to how much fiscal stimulus should you put in, right? We're not talking about it. So like, we're going to make the same mistake again in the future. I don't know. So let's put in today. Active markets ahead of Treasury auction. I like it. I got to get going, guys. I will see you tomorrow for that big day, the CPI. I know. I was hoping to take a trade and just kind of like let it run and then maybe take a gamble on CPI. But the way that this is kind of going right now, it's probably going to be a sit on the sidelines for a bit, huh? All right. I will see you tomorrow. Stay profitable, friends.